Hey everybody, today's May 24th, and today we're going to talk about the price of Bitcoin. We're going to talk about whether this correction is over or whether we're going to continue down even more. Before we begin, please just read this disclaimer. You can pause this video as you read it. Okay, so over the last few sessions, Bitcoin has been really struggling to stay above $30,000, right? I talked about how these moving averages and Fibonacci lines act as strong support and resistance levels, and when we break them, we tend to flip them depending on the direction in which we break, right? For example, when we broke this Fibonacci level, now this is going to be strong resistance because we held this as support these last two times, but now that we've broken it, when we come back up, it's going to be strong resistance. Same thing with these moving averages, right? When we broke this moving average, the 50-day simple moving average, which is this silver line, we came down pretty hard, and we actually broke below the gold line, which is our midterm moving average, and we couldn't quite stay above it. And then when we finally broke above this Fibonacci line, we came down pretty hard, and we tried to stay above our long-term moving average, which is this blue line, which is a 200-day simple moving average. But when we broke it, we broke pretty hard, and we came down and found support off this Fibonacci support line, which we also found support back in late January over here when we had our first major correction of the year. So the fact that we're holding here as support, it's no surprise that we're also holding here as support, but it's really, really important that we hold this level now. Otherwise, if we fail to hold this level, we'll likely break all the way down to $20,000, which is our next Fibonacci support level, which coincidentally is also the resistance level when we came up to test the all-time high and back in late December, around 20,000. So yeah, so it's really important that we hold 30,000 at the minimum, right? But right now, we're getting closer to our long-term moving average, which is the 200-day simple moving average, and it's also really important that we hold above this level, right? We're still below this level, but we have a chance to break above, and when we break above, I hope that we can stay above and test this next resistance level and push up higher, right? But right now, what we want to do in the short term is get above the 200-day simple moving average, which is around $40,000. Now, overall, even though in the short term we have lower highs and lower lows, right? Lower lows and lower highs, plus we have a bearish crossover here with a 50-day crossing the 100-day. So in the short term, we are bearish, right? There's no doubt about that. However, in the longer term, right, we are still in a bullish trend, right? We still have higher lows and higher highs in the longer, like this is the weekly chart. So weekly and monthly chart, right? We're still in a secular bull market, right? Higher lows and higher highs. However, in the short term, with lower lows and lower highs, this trend is bearish. However, it does seem like buyers are stepping in. See these long wicks? These long wicks means that when the price comes down, the buyer stepped in and bought down here. So I want to show you something. It's very similar to here, right? Where we had these two long wicks. Buyer stepped in and pushed the price higher. And also, very similar is back in September when we came down hard, we've also had these long wicks, and this formed a sort of ascending triangle, right, over the from September to October, and then buyer stepped in and basically pushed the price higher until we had this breakout. And so I think that that's something that we might see in this technical pattern in the next couple of weeks, is something similar where we have higher lows forming sort of a triangle pattern and then perhaps breaking up higher, right, from this triangle pattern. So that's what I think will likely play out. I don't think the price will necessarily just suddenly recover unless we have some like really groundbreaking news that just like maybe Elon Musk accepts Bitcoin again, right? And then the price just pushes up higher. But I do think that this is going to be likely a slow grind higher, right? And that's probably a healthy thing because if we look at like why is it that we came down so hard? Well, in the last 6 months, right? I talked about this in previous videos where we pretty much went straight up for 6 straight months from October all the way up to March, right? 6 consecutive green weekly candles, and the last time we had that many green candles was back over here in 2013. And same thing, right? We had 6 consecutive green candles, and then we had 2 followed by 2 red months, and that's something what we're seeing right here, followed by 2 red months, right? So the good news is that this month is almost coming to an end, right? In June, we should see a green month, because if we look at 2017 and 2013, which is our last 2 like super bull cycles within this 4-year cycle theory, right, in Bitcoin, we've never had more than 2 consecutive red months in 2017 and 2013. So if we just follow the past, obviously history doesn't always repeat, but it does rhyme, right? That's the famous saying. We should be seeing more buyers coming in and supporting this market from coming down even more. Now that's only if we hold 30,000, right? We absolutely must hold 30,000. I mean, this is like, if we fail to hold 30,000, this is going to become a bearish trend, right? But for now, we're just barely scraping by, still in a bullish trend in the longer time frame, right? However, of course, in the short term, we still have to say that we're bearish due to this cross, due to the fact that we're still in, let's zoom in on a 4-hour chart, right? We're still in a downtrend, right? And what we want to see in this 4-hour chart is we want to see, because right now we are still making lower highs and lower lows, but we want to see perhaps breaking above 40,000, right? And to start to put in higher highs and higher lows. Like we pull back and we want to make higher lows and higher highs. And what that's going to do is that's going to reverse the downtrend that we are currently in. So I want to see that at least in the short term, right? In the long term, still in a bullish trend, but we need to start grinding up higher, right? We cannot come down and retest this Fibonacci level again. Otherwise, the probability of us breaking lower is a lot higher, right? Now, some good news. The dollar continues to be weak and come down. And we talked about this many times in previous videos, that the years where the dollar is weak, for example, in 2017 and also 2013, right? Those were the years where Bitcoin had the big bull runs, right? 2017 and also 2013 over here. And subsequently also when the dollar was very strong, like in 2018 over here, and also in 2014, Bitcoin was in a bear market, right? 2018 over here, it's 2018 and 2014 over here, right? Bear markets. So right now the dollar is very weak. It's coming down. We had a bit of a breakout earlier this year, but that rally has pretty much been faded, and it continues to go down. So that should give more strength for Bitcoin to rise higher, right? As people don't want to hold dollars, they want to diversify into other assets that are going up against the dollar, right? Another thing is that the fear and greed index is at 52-week lows. 10. That's we haven't been this low since March of last year, right? Since the pandemic crashed all the markets. So if you look at the past, whenever fear and greed index is this low, right? This is generally a good time to buy. This is generally a sign that the market is likely bottomed out. So in my opinion, I do think the probability that this correction is over, that this is probably the bottom, and that we will continue to grind higher, slowly probably, but continue to grind higher, is a lot higher than us continuing to go down lower. Obviously, we need to take this day by day, and I'll definitely update you guys going forward. But I do think that this is likely, I would say, the bottom for now. Yeah, so the most important thing right now is to reclaim the 200-day simple moving average. We want to go above it and then continue to put in higher lows if we do come down, and of course higher highs, and reverse this downtrend into an uptrend, right? And of course, we absolutely must not go below $30,000. Otherwise, this entire trend is probably going to come down all the way to 20,000, and we'll be in a bear market at that point. So hopefully we're able to hold these levels and break above 40,000, and of course above the 200-day simple moving average. But I'll have to update you guys going forward, as this may take some time to play out, and I'm expecting the market to move sideways for a while before possibly breaking out higher above this Fibonacci line. So resistance around the 200-day simple moving average, and also a resistance around the Fibonacci resistance level around 47,000, right? So let's just keep an eye out for that, and we'll definitely update you in our next video. Thank you for watching this video. Don't forget to like this video, leave a comment below, and subscribe for updates if you found this information helpful or informative. I appreciate all your support. Thank you again, and have a great day.